We've seen reports of a summer stock decline. Is that true? Joining us to give us some insight into these moves from the stock market is Brent Wilsey, President and CEO of Wilsey Asset Management. Good morning, Brent.
Good morning. Good to be here.
So historically, how does the stock market typically behave during the summer months?
There is a saying called sell in May and go away and come back after the summer. And that's because June is generally a bad month. July is a good month because the index rebalancing, but then August and September are bad months as well. So you come back in October and that's supposed to be the better time. You want to kind of look at your situation because what is going on now. There's and I'll let you know too, we're in the highest cash position in our portfolio since 2008, which is very strange. And it's not because we're selling just because of concerns, because we can't find anything to buy and things have topped out. So we're making those sales. But we are in a good financial position. The economy is good. Household net worth, very good because of the rising stock market, rising real estate market, job wage growth, many good things there. But we do look at other things that on Friday, the PCE came out and it was like 2.75. So no chance that the Fed's going to reduce rates in June or July, so that's off the table. So can't look towards interest rates declining. And there's no catalyst we see going forward. But what we are seeing is that in the last, we'll say year to date, the four companies, NVIDIA, Microsoft, Alphabet, and Apple, are up $1.4 trillion. Now that's more than the other 496 companies combined. Very expensive, but they now account for about 33% of the index, when back about 15 years ago, it was only about 7.5. So things are very pricey, and that's what's got people kind of concerned. So what we say is like, don't panic. Because when you panic, you're going to make wrong decisions. You make wrong decisions, you're going to feel good because you made that decision, but you're not going to know, you're not going to have the opposite of panic when to come back in. So don't panic when it comes to investing.
And you also say, understand what you own. What does that mean specifically?
Very important. When we invest in businesses and equities and real estate and so forth, we look at a couple of different things. What are the earnings? What are the cash flow? And what are we going to pay for that? Don't overpay for it because you're going to get burned down the road. So understand what you're paying for it. If you're in a mutual fund or 401ks, look at your mutual funds. Have some of them gone up tremendously? Well, if they have, maybe you want to kind of look to say, well, what's in them? Do they have high positions in equities or real estate that's just too expensive? Understand what you own in your 401k, your investment portfolio, because that can make the difference of making an educated decision versus an emotional decision.
Yes. Okay. And now you also say paring back, don't sell all.
Yes.
What does that mean?
What that means, very, very good, because there's different things out there called rebalancing and take profits and so forth. We don't use those. We use what we call paring back. And we've done a couple of things. We did actually sell one of our largest positions we've held for 12 years with a huge gain, because it became overpriced. We sold the whole thing, but that's not always the case. We have another position we bought about 14, 15 years ago that's become a big part of the portfolio, and we see the fundamentals breaking down. It has very good returns. It's not a sell, but it's too much of the portfolio. It's like 8–10% of the portfolio. So you pare it back. You don't sell the whole thing. You sell off maybe 2 or 3% to bring it back down to maybe a more reasonable position in the portfolio.
Okay, and lastly, you say quality will rebound, but a less than quality product will not.
Yeah, I call it crap. If you hold crap, it's not going to do well. We can say that on TV, right?
Sure.
So, but it is true, because maybe you miss things, you don't do anything. If you invest in good quality equities or mutual funds, they will do well for you. They will, and they will go up and they will go down, but they'll rebound. But if you're trying to play, you know, the GameStops and the meme stocks, all these crazy things, you could lose out big and never get it back. So stay away from that stuff. Invest in quality. Even if you don't sell at the right time, you will do well over the long term, and just be patient with that.
Whatever happens, don't panic.
Don't panic, because emotions are the worst things. Yes. Our slogan at Wilsey Asset Management, no emotions, just results, and it's worked very good for 40 years.
All right, Brent Wilsey, Wilsey Asset Management. Thanks, Brent.
You're welcome.
Good to see you.